David, welcome to the podcast. Great to have you on.
Excited to be
From
here.
what I've been able to make it of your journey to date, perhaps one of the standout features would be your ability to scale through specialization, building what started out as a bit of a marketplace to a multi-million-dollar platform. And love to unpack that. But to give our listeners a bit of a background, David, you now serve as founder and CEO of Harness Wealth. And Harness, I believe, is on a mission to make bespoke financial advice accessible, intuitive, and valuable through your current platform. Prior to Harness, you were the former COO and CFO of Compass, where you scaled the business from pre-launch to 350 million in revenue, then became a CFO responsible for raising 300 million, ultimately valuing the company at about 1.8 billion in transaction with Fidelity and Wellington Management. Today, of course, you have started Harness and grown it quite significantly, but I believe it came from an issue of receiving bad tax advice. Love to explore that in a bit, but essentially the platform, as I understand it, connects individuals and businesses with top-tier tax professionals and financial advisors to ensure they receive accurate, tailored advice. In fact, in this journey, you've also raised funds from a few significant people, which I'm sure you'll talk about. But I'm curious if you could take us back to that moment where you got bad tax advice. Give us a little context and tell us how that kind of led you down this path of building out Harness as it is today.
Yeah, my pleasure. Happy to. It really goes back to when I was tapped to take on that leadership role at Compass and was doing the operator and financial leader thing for the first time that I turned to two, not just business school professors at Harvard, but entrepreneurial finance business school professors ask about, hey, there's some people at the company that want an early exercise program. Should we do that with the stock program that's in place for the company? And both categorically said, no, an option program is meant to be an option. Don't worry about letting people exercise early. And that I think was good generic advice, but missed the fact that in 2010, 2012, there had been a pretty significant tax law change that meant that if you held stock outright in the US for 5 or more years, a very significant portion, 10 million plus, could be tax free. And so what I took away was sometimes the generic advice is not the best advice for a given situation. That dovetailed with the theme that we stumbled into at Compass, which was the value of creating technology to enable advisors to work more effectively with their clients. But as I'm sure we'll get into in this conversation, I've been fortunate to help lead two successful businesses over the last 12 years. And across those two businesses, we've had at least 5 different go-to-market approaches and strategies. A lot to unpack in what
Sure.
we've found some repeatability and success in across those.
And in your journey to date, what would you say is your personal area of strength?
The first sort of professional endeavor that I took on was a super precocious one. I decided when I was in college I was going to write a business book, and it really stemmed from the fact that I didn't know what I wanted to do after trying to work on Capitol Hill, doing it and realizing that there are a whole bunch of factors outside your control, like which party was in power and who the member of Congress that you worked for might have inadvertently had an affair with that could impact your career trajectory. Decided to go down the corporate path, but really had a lot of open questions on, was that consulting? Was that banking? Was that helping to run a venture-backed business or private equity, whatnot? And, what I utilized there, because it was pretty odd for someone who hadn't even started their career to write a business book, was I think a skill around being able to ask good questions, gather a ton of information, and synthesize that effectively. And I think what has helped me to be a reasonably effective fundraiser across 10 plus rounds and now getting, I think, close to, if not past 400 million of capital raised, is in being able to take a ton of different data points and trying to synthesize them into a story that makes sense. And I'm not a great fiction writer in creating stories, but I think the ability to articulate why there's a market opportunity, what attributes of a given business help position it for historical and continued success, and what you have to believe for that to compound in value. So I think that has really been helpful. The other piece that I would say is I got really good advice, though I think given in perhaps a misdirected way when I was in business school before I chatted with the Compass founders. I went down that path from a still friend of mine, very successful founder who said, David, if you want to leave private equity, investing, et cetera, and work in startups, you either have to be a builder or a seller. Like nothing else really matters in the early days. And unless there's something I don't know, like you're not a computer scientist, so you're not going to be a builder of a technology company. So you got to learn to sell. And now, granted, he was pitching me on a enterprise sales role at his company, so you take it with a grain of salt. But while the way he positioned it, I don't know if I would totally agree with in retrospect. I do think that the way that I have added the most value, both at Compass and now at Harness, is in the ability to sell, but in my own unique way, and not necessarily just selling a product, though I do a lot of that at Harness, but really selling a story. And that story has to be compelling enough to convince people to, in most cases, leave a good job that they have elsewhere and invest at least a chapter of their career in the mission, vision, and execution that you're deploying against, and convincing people, whether they're professional investors or angel individuals, that what you're up to is compelling enough they ought to give you capital that they may never see again in support of that mission and hopefully compounding equity value.
So, in this area of strength, what would you say is something that businesses don't know but should?
In terms of some of those selling is,
Even your
or
ability to pull together data points to tell a story that appeals to potential investors, etc.
yeah. I've looked, it's when you say that, I asked the question that way. I looked at a deck for a friend of a friend recently because they were like, oh, this is in the fintech space. What's your point of view? And I looked at it and they wanted honest perspective. It was nice because I wasn't actually giving it to the founder where you want to be much kinder because pitching and trying to raise capital is hard. And so it's nice to be nice. But I said, listen, at the end of the day, I think what matters most is there a real market opportunity? What is the strength of the team and the attributes that are required to execute against that opportunity? And then what, if any, unfair advantages do the business through technology, through distribution, through anything else have to really be successful in an area? In the case of this particular pitch deck, I didn't think it had any of those, at least not that were being communicated in those materials. But I think it often really boils down to those three things, at least in the early days. Then obviously traction, execution, and lots of other validation points can be important in what you're presenting if you're trying to raise external capital or to sell individuals. I think the venture-backed ecosystem is over time become one of the best segments, I think, for recruiting, because often when companies take off, they have to recruit significantly at scale. They're trying to convince people often to take lower cash compensation than they could get elsewhere in the market. And so there's a much more material investment in selling potential employees, whether it's executives or ICs, in a similar way, perhaps, to investors, of better briefs on the company and the prompt. You obviously, it's easier if, you're trying to recruit someone to work at Coca-Cola. People know what the products are. If you're a younger company, it's not just the role, but it's also what's the business doing, and is that inspiring, and how does that connect to its likelihood of success and growth opportunities? I think, again, telling a compelling narrative can be really valuable in both those respects, for capital raising and for team building, as well as obviously, hopefully, seeing a product.
Interesting point there. So correct me if I'm wrong, but would you say that most founders don't take the time to pause and refine their purpose and mission, as it were, for the genesis of this company and bringing alongside like-minded folk?
I wouldn't say that founders generally don't do that. I think it's more of just a helpful reminder, especially for first-time founders and the teams that join early on, of how big a decision it can be for anyone, who's getting involved. And the more compelling the narrative and the clearer it is, the easier you make it to bring on the partners that you want to have as you scale
Okay.
enterprise.
From another angle, would you say that slowing down to specialize actually helps accelerate revenue growth in the long term?
For sure on that. I think when we first started Harness, the thesis was that there was increasing financial complexity for next generation
Hmm.
entrepreneurs, company builders, professionals, et cetera. And you had this massive wealth transfer of trillions of dollars. You had increasing complexity from self-directed retirement and more access to alternatives and more equity-based compensation. So we're going to solve all of that. And I think we became much more successful in thinking through if your distribution is D2C, or if perhaps it's even B2B2C, being more focused can actually unlock more value and narrowed in on a few particular segments. Then as we've scaled and become much more focused on tax as the area that we're solving for, it's allowed us to expand well
Hmm.
beyond that. But I definitely agree that the more specialized you can be, the better. And I think we'll probably dive in later on to some of the unique quirks of the professional services market. But I will say that one of the things when I talk to tax advisors or financial advisors is the tendency that they have, especially in thinking about their own growth, is I can serve anyone. Like, I'm bright, I've got some skills. Like, send
Hmm.
me your law firm partner, send me your dental practice owner, send me your Australian US expat who runs a thriving marketing business. And that can work, especially if there's some unique distribution node where people are coming in the front door and already trust you that you're going to be great. But for the vast majority of businesses, picking at least one lane or a couple lanes and sounding really
Hmm.
credible in those and having a bunch of clients that look like the next one who comes in the door ends up typically, not always, being the businesses that grow much faster. And it's much easier to expand over time than to try to be everything to everyone out of the gate and be compelling to each person that is a prospect.
You make a compelling point there, but I'm just also curious, were there specific metrics or indicators that convinced you that specialization was the right strategy?
It's always hard to prove that it's positive. I think we found clustering of the clients because we were doing a bunch of different like paid spend tests, et cetera. And when it was fairly generic, wasn't working as well. And of those clients that were converting, we also saw, hey, there's this growing kind of concentration node
Hmm.
in the chart around people that work in like the broader tech venture ecosystem. So maybe there's something there that we want to ensure in our website design and how we're speaking to and how we're them and how we're thinking about distribution of B2B2C to get in front of them that we ought to invest in versus simultaneously going after professional athletes and professional service and
Hmm.
this and that, et cetera.
Right. You started out, as I understand this, targeting a services segment and added in layers of technology to help deliver some of these services. Can you walk us through your thought process of doing that? Because most people would say if I deliver a service in specialized knowledge, you need to know various things. And while automation can help with a few elements, not too much can be relegated to technology. How have you dealt with the complexities of an evolving profession like tax, for example,
Yeah.
and allowed for technology to deliver?
Definitely have not always gotten
Mhm.
strategy perfectly right, but I do think that I'm always drawn to mildly counterintuitive approaches to business opportunities. So I think when we in the early days, this is 2012, 2013, beginning of 2014, in building Compass, I think the broad view was real estate agents are going away. The fees are super high. It's all about who's going to win in DIY,
Mhm.
self-directed, et cetera. And what we found in starting with a very kind of D2C consumer model, discount the thing, break up the workflow, et cetera, was actually people kind of liked having an advisor. And while they didn't love all real estate agents, they generally liked the advisor that they had used if they had gone through a purchase decision, et cetera. And so maybe it wasn't the agent that we ought to be displacing, but actually the brokerage that
Mhm.
was taking on average a third of the economics in the industry. and create a better set of resources for human traditional service advisor relationships to flourish through a better platform, brokerage, whatever model you want to think about powering those things. A similar view at the intersection of financial advice and tax, where a lot of folks felt like, hey, financial advisors are going away with the advent of robo advisors, or tax is going to go away, or now even more so, hey, AI is going to mitigate the entire profession. I think generally I have taken the view over the last 12 years, 10 years, depending on how you measure it, that there is a real persistence in the value of good specialized advice and providing leverage, and that technology that facilitates better collaboration between advisor and client in areas where the service or the insight is not a commodity where you could quickly buy the exact same thing online. It's going to be the same for any person consuming it, has longer longevity, I think, than some assume. And so we started with a service discovery advisor pairing data enablement marketplace where we felt like there's a real opportunity that this next generation audience that we're trying to serve, a lot of great DIY solutions. If someone can be served by them, awesome, they should do that. We want to play in the market where someone has the complexity that they feel that they need a human advisor, but don't necessarily have $100 million to build their own staff to meet all these needs. And that's where we started. And then what we found, because we had a multi-service vertical set up from day one of financial advisory, tax advisory, trust and estate, was tax tended to be like my early Compass Equity situation, the first challenge that people needed to tackle. And it turned out it was also, unfortunately for us with the pure play marketplace out of the gate, the hardest to find great supply around. And so that insight led us to focus really a huge amount of our efforts over the last 3+ years on building technology, not just to help pair clients with advisors or make the upfront work more effectively, but really to create an end-to-end collaboration platform between clients and advisors that is seamless and insightful and utilizes the best of what's out there, AI among many different technology levers, to deliver a better experience for folks looking for great tax advice and a more efficient experience.
So, are there phases to technology adoption that you have thought through and implemented at both at Compass and Harness?
I think there's some reasons why professional services are challenging to sell technology into, and why the opportunity is still there and not totally solved over the past 20+ years of great B2B and B2C technology innovation. I think one, the majority of professional service firms are smaller scale, sub 10 million, not a ton of appetite to make big R&D investments or to have professionals focused on identifying, integrating, provisioning, utilizing technology. The second is that the successful people that have had decade-plus runs and are the most successful have gotten there by doing things, quote unquote, the old-fashioned way, whether that's real estate advisors, it's tax advisors, financial insurance agents, you name it. And so the hurdle is higher to convince them that they ought to incorporate technology when they've been successful doing things the way that they've been doing them. And so I think to be successful here, you've got to have a disproportionate investment in training and people to really handhold advisors, not because they're not intelligent, not because they don't have the propensity to do things that are great to their business, but they're really busy. And so you've got to make it really easy and often more human-led in the onboarding, the service delivery than many a business might seek to be, because that's how you can unlock the most value, is actually really showing them repeatedly how the integration of what you have to offer can dramatically improve their workflow.
I would agree with that. However, my observation, be it limited, would be that perhaps a lot of these advisors, at least from what I've been able to observe, often get stuck at partial implementation of technology adoption. And I'm curious, what would be your take on that?
No, I think that's exactly right. And that's why I think it's not often the case. There are some great technologies maybe where this works that you can just sell once and kind of leave the client on their own, especially in the longer tail of the advisory
Mhm.
professional service segment. It really takes having a continued investment in education that can come from peers and community building. It can come from great online education, which is a specialty of yours. It can come from one-to-one higher service levels that either premium pricing enables you
Mhm.
to deliver or has an incremental cost to it. But yeah, I totally agree. It is not on a glide path once someone,
Mhm.
has signed on the dotted line to full implementation and usefulness. It was years and years at Compass where we got to really massive scale before realizing, hey, we actually want our advisors not just to onboard and give us money, but actually to use all the tech that we're building because we really believe in the value both for them and for our bottom
Mhm.
line in the uplift it can create. And it required a multi-departmental CEO down push to really drive that. So yeah, I
I
completely
can imagine there's probably a few people listening in going, I can relate to what you're saying, but a couple of questions come to mind. One being helping clients resist the temptation to jump straight to Z, if you will, in terms of implementing solutions when their foundations really aren't ready. And
yeah.
related to that, what are some of the specific workflows or processes that you would recommend B2B service companies automate first before jumping into the whole AI bandwagon?
It's a great question. And actually, I did a whole podcast fairly recently with the AICPA Tax Odyssey group on this
Mhm.
theme, where I spoke to the really three phases of technology adoption, innovation, at least when it comes to tax practice management. Almost all advisors, at least those that are under a decade post retirement age, did the 1.0 stuff. There is some digital way for clients to share
Mhm.
files. There's most of the time some infrastructure for a digital signature or to e-file with the IRS, which they now require for a bunch of different things. The 2.0 though is the automation of workflows where if you've got 100 clients doing the same thing, you're not doing 100 times the work to send out emails, et cetera, in the way that you customize client questionnaires, the way you request documents, the way that you notify clients of what the process looks like, et cetera. And then the 3.0 is really around that or just like insight driven custom pathways that technology
Mhm.
affords. And the opportunity is huge, but if you don't actually have the foundational components of training your clients to interact with you largely through technology, you have a really hard time jumping straight to 3.0.
Mhm.
Yes, you can take certain data points and have an automated email created that might save you some time, but the bulk of the time that most advisors spend in core tasks is really hard to get the AI benefits around if it's not predicated upon a consistent technology driven workflow. And so Harness incorporates both all of two and parts of three. And
Mhm.
we seek to be a partner for our tax advisor clients and really helping them jump from what typically is 1.5. Like they're not
Right.
stuck just in 1.0, but they haven't fully realized 2.0 to get all of 2.0 in place. And then with that, to really get the major benefits of what 3.0 can entail in auto categorization, data extraction, customized communications, et cetera, that are enabled when you've got the right raw data set to be able to inform those
Mhm.
things.
So, with Harness, I'm assuming that you started first with what would have been traditionally manual process in terms of delivering outcomes and services to your clients. And I'm curious, how do you transition transition to more of a technology implementation while pivoting your revenue model, but also maintaining growth momentum?
Yeah. So I think for us, we started with this D2C
Mhm.
marketplace. We were able to build reasonably efficiently an early version of the business that we could take to the market and kind of see what was working around some insights to drive early conversions, et cetera. The decision to, it wasn't a full pivot, but evolve to a big focus of ours being this vertical SaaS B2B play in tax, I was nervous about. And I validated it myself, where I kind of left our other senior folks and still reasonably small teams who are saying, hey, you guys all focus on trying to make the marketplace work. I see this angle around tax advisory and unlocking proprietary supply, but in doing so, also creating incremental demand through clients of tax advisors that they already had before I met them. And so I went out and sold some very early advisors on a view of how the demand in our marketplace could translate into business growth for them, and that we would start with best of breed third-party technology and then use our learnings from the way that they were running their businesses to selectively build proprietary technology to create this extraordinary experience, hopefully, that was integrated. And I think pros and cons of taking that approach. I think we probably could have grown faster or be even further ahead than we are if we just ripped the Band-Aid and everyone, when I had the inclination, shifted over. But it also may have been a terrible idea. It was not clear at the time, where I think it definitely has played out effectively now. I don't know. I'm a little bit more risk adverse and calculated with our capital investments. And so it felt like working harder myself while keeping kind of the boat in the same direction before starting to turn the wheel was the right way to do things. And I, again, pros and cons. And
I would imagine that as you're speaking to some of these tax advisors, financial advisors, as well as clients, getting them to get on board requires trust building. And you shared about certainly sharing vision as well as a story that can resonate with these particular audiences. Is there more to the equation in order to ensure that there is a level of trust and comfort in coming on board?
For sure. Yeah. I think we have a company value around building trust at every interaction, because when you're helping a client either match with an advisor or provide tax services, fairly opaque, exactly what you're going to be delivering. It's not a physical good, or in some respects, even a immediately quantifiable service, though hopefully it creates a ton of value over time. So there are a few different strategies for doing that. I think one that's been very successful in the last couple of years is partnering with other financial service companies that have existing clients that know that lots of their clients need a more elevated tax experience, and start sending those clients to us directly. That's been one of our fastest distribution growth verticals. But the other area is just creating a lot of content that creates trust. And now I don't generally feel like I need to hear myself speak, but I love doing longer form conversations like podcasts and other stuff, where if someone happens to listen, hopefully they come away feeling, I don't know exactly if this is the right fit, but David seemed at least normal and relatively credible. I'll give it a shot. And in giving it a shot, I think hopefully our clients feel like when they go through the process, it does feel elevated and it does feel like it's built for someone like them. It's got impressive people involved as advisors, investors. The team seems credible. The advisors seem credible when you see potential matches. The technology works hopefully incredibly well. And so that all kind of reinforces across multiple iterations that it's a business that, can or should think about trusting for a really important decision.
And as the platform evolved, I'm assuming you at some point decided to add platform fees as part of the overall momentum forward. Were there specific indicators that gave you the confidence to do that?
So the consumer side, we continue not to have a fee to the consumer beyond the services that they consume. And then there's a rev share component with the advisors that are delivering the service. On our vertical SaaS offering, we started with one model and evolved it to be a more traditional vertical SaaS based upon the quality and the value we believe exists in the pure technology offering to advisors and some of the supporting tech-enabled services. So yeah, I was really making that transition from using third-party technology and the business development levers that we had in creating value to having technology that we had built where we felt like it was more than just a general business lift. It was actually, hey, there's a lift piece and then there's like a technology piece because it's additive to all the clients that end up touching it and utilizing the technology.
I'm sorry, could you expand on the lift piece and what you mean by that?
Yeah, there are two components to the B2B advisor side. There's a revenue share component in terms of growth that we're able to drive through clients that are coming to Harness looking for advisors where we think they're pretty well suited to meet those
Mhm.
needs. And there's another component around technology in terms of that uplift that they can have for their entire client base.
I believe you more recently made the Inc. 5000, and I'm curious, what would you say, looking back, were the three most crucial decisions that allowed for that level of growth?
I think number one, there's that first inflection point of taking the jump to build the thing. There's certain people that really only feel like they are employable by themselves and need to be founders. And I've always been someone who's very happy to spend time trying to tackle a problem I think is interesting, whether it's a problem that someone else
Mhm.
spotted or one that I spotted, et cetera. So I'd say starting the thing is number one. I think the developing a focus area initially around certain client segments, and then more importantly around tax as the core driver really have been the two most important pieces because the first help create more momentum in the consumer side of the business and
Mhm.
conversions. And the second in really creating this, I think, very distinctive and compelling offering around tax for the end consumer clients of tax and for the advisors that we partner with in empowering their businesses.
You mentioned developing content or investing in content to educate your potential market. I would imagine that tax isn't exactly something most people tend to Google unless they have a severe pain point. I'm curious, in order to make people aware of the importance of tax decisions or outcomes, how are you addressing an issue that most people wouldn't necessarily want to be aware of and get them to a point where they would be open to kinds of issues that you would like to speak to?
I actually take a slightly different view of taxes in that among the three services we
Mhm.
offer, kind of financial advice and planning, tax and trust and estate, financial planning, wealth management, and trust and estate actually are more like vitamin services where they are definitely
Mhm.
valuable to your long-term health, but there's not an immediate pain point. Tax is more of a painkiller type of
Mhm.
service where either you get notices from the
Okay.
IRS and you're like, "Oh my god,
Mhm.
I can't believe this, what happened, etcetera." You catch mistakes or have frustrations with an existing advisor, or you start getting tax documents or make decisions, buying rental properties, starting your own business versus being a W-2 employee, etcetera, that create a level of complexity where you're like, "Gosh, I can't DIY this, TurboTax
Mhm.
it, tax act it anymore. I need help." And we have the benefit of some very well known tax deadlines that one of which pops up in a couple months to help motivate people to be thinking about
Mhm.
this for themselves. So there is a catalyst, I think, for people to think about it. I would say that most people also don't want to feel like they dramatically overpaid in taxes in ways where they could have optimized through better decision making in totally legal and compliant ways. And I think there actually is a higher level of interest in, hey, what could I be doing to get to a better optimized outcome than not?
Okay.
That being said, people's attention span is shorter. It's definitely not as sexy as having a $50 million home listing and lots
Mhm.
of pretty pictures that you can post to or talk about. But people at cocktail parties like talking about real estate and they like at least certain times a year talking about good investments and effective tax strategies. I think the key is on the content that we create, how do we demonstrate insight and expertise beyond the basics that people already know, where they're going to say, oh gosh, if that's all they're writing about, then I know what I'm doing. I
Mhm.
don't need their help. But not so technical that you lose people in the jargon of an IRS bulletin or of a global tax firm's note on some very specific taxation only applies to manufacturers of certain goods in certain US states, et cetera. And there's that balancing act of seeming insightful, credible, but approachable when it comes to tax.
I'm curious, would you say that with the content and education pieces that you develop, you're trying to encourage word of mouth? Would that be a big driver for new clients coming in to your pipeline?
I did it. The content is largely driven towards building the trust with an individual who finds us through any number of ways, obviously referral being one of them, to feel like there is the expertise that's going to help solve the problem that they're trying to, whether that's tax related or happens to be trusted estate, financial, et cetera. We care a lot about the experiences of our clients. So we've got NPS 70 for the overall experience in a segment that typically is barely NPS positive, super high CSAT scores, et cetera. So the goal is get people in through a variety of different ways, build that trust, but then show them a great experience. And then we have incentives to refer a friend to come in, et cetera. Because obviously we want people to have good experiences and share that and be incentivized to do. But the content really isn't educating those that stumble across, or maybe a friend mentions it, but very often it's through a partner or an affiliate or through SEO, et cetera, that they come across us. And the job is using that to build the credibility that this is a company that could be useful for the thing that I'm trying to address.
Certainly. And if I'm hearing, at least based on what you're saying, I would assume that culture is one of the key factors that have allowed you to grow the way you have. I'm curious, I think you alluded to the fact that you have values, trust being one of them. But apart from a set of values, what else are you doing to bolster the kind of culture that allows for these high NPS and CSAT scores, etc.?
Yeah, I think we aspire to have an organization where sales with value, people are empowered to both make and be accountable for their decisions. And so I think we've had great success with a concierge client success team that is not an AI bot or agent, but are really talented people that care a lot about the client, that in the early days and to this day, even at a pretty significant scale, are able through interactions, whether it's chats on our website or it's a conversation with a client about tax service, et cetera, to help amplify the trust with the human interaction that they're having. And that is the case in all other aspects of the business, marketing resource or technology team, et cetera. Hopefully having enough context. The team is relatively small given the scale of the business today. And so we just did a few weeks ago our annual whole company onsite. We bring everyone together. We've got a pretty robust multi-year planning and OKR process, because the more that each team member knows strategically what we're trying to build towards, they hopefully can help prioritize their own work and where they spend time and which clients they work with, et cetera, to support those goals.
Okay, brilliant. I'm also curious, with client onboarding, is there a particular structure to the way you do it that reinforces the value of specialization?
There are definitely some unique ways that we do it. I think we tend to seek to attract those that have some specialization. I would say that one of the forcing mechanisms is that for advisors that partner with us and want to be on the marketplace and have access to net new clients, we require that they force rank areas of expertise so that we can get them prospective clients that align well with areas that they are differentially knowledgeable about, because that's what leads to higher conversion rates, which is to their benefit and to ours. We have a cohort-based onboarding. We make that fairly white glove and high touch to hopefully create value and bring people on in ways that feels very aligned with our client promise. But it's really in kind of that lead generation growth side of the business that we structure the data that we gather in ways that hopefully reinforces the more specialized you are, the better, we can be as a partner to help you grow your
Okay,
practice.
that certainly makes sense. But with the progression of time, is there a bit of a battle to prevent specialized service offerings from becoming commoditized? Okay.
Not yet. I think in,
Mhm.
in a good way that we have a growing and expanding base of clients that are coming to us looking for our services and looking for advisors that can meet that. And as our advisor base grows, we've got even more matrices of
Mhm.
expertise that relate to the US states and international areas where someone may have exposure to the types of asset classes, to the types of income, to the
Mhm.
historical complexities or disagreements with a tax authority or something else. And so the more advisors we have, as long as they all, meet our pretty high bar for being part of the ecosystem, the better we're going to be equipped in delivering great experiences to clients that come to us looking for the right advisor to work
Certainly.
with.
And I'm curious, in the next 2 to 3 years, are you seeing emerging specializations that would allow for growth opportunities, or is it evolving the platform?
Yeah, I think our growth is really going to come from expanding the technologies that we offer that really create this seamless and insightful experience both for the end client and for the advisor. And ultimately, when end clients are telling their advisors, gosh, that was a dramatically better experience since you
Mhm.
joined Harness, that's really helpful. But equally, if not more important, is the advisor saying, wow, I just got twice as much work done with the same amount of people, or able to grow without adding additional people because the leverage that I was
Mhm.
getting is really where we see the most focus areas. Certainly in the US, there is secular growth in the volume of equity compensation relative to what it's been historically across public companies, private equity backed companies, you name it. And we've got a big investment there and think that will continue to be valuable and important. There's some smaller niche areas. We've got advisors with great expertise in legal crypto businesses and in online gaming and in all sorts of areas that didn't exist or didn't necessarily have a expertise specialization before. But the growth really comes from having a better and better experience for the clients that we serve, both the end consumers and the advisors, more so than some of those areas of special.
I'm sure we've just touched the tip of the iceberg, so to speak. But David, when it comes to scaling through specialization, are there perhaps a couple of areas that you find doesn't get talked about very much? If so, what would they be?
I think one that I didn't totally appreciate is you can be specialized in multiple
Mhm.
areas. I think especially in a digital world where you can have different landing pages that align with different content, different advisors in your platform, et cetera, where you can be a highly specialized and fabulous solution for multiple specialties. And so specialization doesn't mean you only can serve one thing as a scaling technology driven service delivery business, but it does mean that you've got to resonate with a high degree with clients. And especially when you're early on in the journey, the specialization and specific expertise that you can demonstrate can allow you to overcome the barrier of maybe you're new and don't have a ton of
Mhm.
clients overall, or maybe you're new and don't have the scale of a lot of the other potential options out there. But if someone feels like, gosh, this is exactly the right solution for me as a US, Australia based business owner, or whatever the thing may be, people tend to be successful in pursuing that.
Okay, brilliant. And David, if you were listening to this episode, what would you say would be your top takeaway?
I'll give you a top
Sure.
three. I think, number one is, as I alluded to, across two businesses that have been to date quite successful companies, now a $4 billion public company, and Harness continues to grow. It's okay to evolve the go to market strategy in
Mhm.
the business, but I think figuring out pretty quickly what's working and doubling down on those things and spreading yourself too thin is critical. I think, as you alluded to, and I think it's an area of conviction for you, but being able to speak credibly and with appropriate expertise and specialization, especially when you're in areas where there are big markets and lots of providers. Having that in general, but certainly in the early years, is critically important. And I think third is the value of taking an expansive view of sales. And anytime you're trying to get someone to give you something, their capital, their professional time, or their purchase decision on your core product, the more polished, compelling, clear the value proposition is, the ROI, et cetera, the better I think the
Mhm.
outcomes, are going to be for you as a founder in business.
And for those listening in or watching who would like to find out more or connect with you, where would you recommend they head to?
Best resource for what we discussed is our website, which is harnesswealth.com. And I'm pretty active on LinkedIn. So if you search for David Snider Harness, happy to correspond there if individual questions or
Okay,
stuff pops
we'll
up.
include links to that in the show notes. David, this has been brilliant. Thank you so much for doing this.
My pleasure.
And